So what is meant by a cap rate with insurance or even with annuities? The cap rate is what the insurance company sets as the bar of how much money you can make up to that cap. So if the cap's 11% and they're invested in the S&P 500 index and the index goes up 11%, you get full participation up to 11%. If the index goes up to 12, 15, 20%, you're capped at that 11%. Since you don't have 100% of the upside, the other bell and whistle that people like is that you get none of the downside. So you get zero is your worst case scenario. So somewhere, usually you're going to get between 0 and whatever your cap rate is. So instead of the market doing this and you don't know where you're going to be, in these particular products with cap rates, I draw the analogy of like a staircase. Because what happens is you get 0 when it's not performing and you get performance up to 11% when it is performing. So that you're eliminating the downside, so you're eliminating all this in that volatility. The cap rate becomes what is credited into your policy. So if you're getting 10%, that 10% is credited on the money that's in your investment account. Remember, when you're making your premium payments, a portion is going to the cost of the death benefit and expenses associated with the policy. The rest of the money is going into your investment account, and your cap rate credits on that over the long term. With your annuities, same strategy. You get participation up to that cap rate. Again, you don't have any of the downside associated with the stock market. So if you look at the long-term returns of investments compared to just unmanaged in the S&P 500 index, because we're able to reduce that volatility, because we're never spending time making back what we lost, you get very competitive returns as opposed to just taking your money, throwing it in the S&P 500 index, setting it and praying that it goes up. The cap rates in those products are designed to take a lot of volatility out of that equation and still give you some decent participation on your money so that over the long term, it's growing for you.